Early Monday morning. It's been a while since I made a video for this channel, so I figured before things get crazy, let me do a quick video. So nothing has changed. We continue to do all the same things. So let me quickly explain if you just come to this channel for the first time. In Discord, I post buy and sell levels for 7 futures instruments, and then we have a certain way of trading them. Now I post them as close as I can to Globex opens. Globex opened the evening before, so this way there's plenty of time for everyone to organize their charts. Now one of our members of the group actually created an indicator that plots these levels automatically and finds the midpoint. The reason the midpoint is important is because as price is going below the midpoint, we expect price to hit the sell level, and so below the midpoint we are looking for short trades. So this is an example with crude. Now very often, of course, yes, this is kind of a mini completion. Don't necessarily expect it to be the low of the day, but it is an area. So if you are trading in multiples, for example, you would definitely cover, I would say, at least half a position as price arrives. You would actually try and fade it a bit. In this case, price actually touches the level, but you would try and fade it a bit just in case. If you're trading in multiples, at least half your position is out here. You have no risk on the trade, and you're just looking to see how much more you can get out of this trade. This is the euro, same exact idea, right? So when Globex opens, and I posted my levels right after 6 p.m., price was the whole time below the midpoint. It was weaker to begin with, and so a short trade is what's in order for price to come and hit the sell level, and it's doing it now. It is hitting the sell level here. So this is gold. Gold again, I post slightly after 6 p.m. It got below the midpoint and hit the sell level. Now another thing to keep in mind is that as price breaks a level, this area continues to have attraction for the price. So what happens is, once price breaks 8 out of 10 times approximately, I don't have an actual statistics, but it's something like 8 out of 10 times, price will retest the level. So we have a break, retest, and now going lower. So it could still, and as a matter of fact, I expect it to again retest the level. Again, that is why if you're trading in multiples, you would take half your position off here, right at the level. Now you have no risk on the trade, and you would kind of see how far it can get you. So now we have the 4 indices here. Now I will stop. So let's look at something that's going against me, because yes, it does happen. So here we have a case of price going below the midpoint. I thought it would continue lower, because that's what happens most of the time. Price continues lower toward the sell level when it breaks below the midpoint, but instead price went against me, and so if price breaks, let's say, this pivot here, I am watching this. So I don't have a stop at place, but I'm watching this. If price starts breaking to the upside above this midpoint, I will take a stop on the short and possibly switch then to the long side, expecting the price to hit the buy level instead. It does happen that that I take stops, of course. So kind of something to keep in mind. Let's say you're watching these 4 indices: the YM, the Russell, the Nasdaq, and the S&P. Looking at them, for example, you can tell that the Nasdaq is the stronger market out of the 4, and the Russell is the weakest. Why do I say that? Look at price in relation to the midpoint in every single case. Over here, price is above the midpoint. It is stronger. It is the only market as of right now that its price is above the midpoint. The other 3 are below the midpoint. So that's one observation, and that's why I'm saying the Nasdaq is the strongest. Looking at the Russell is way below the midpoint, really not too far from its sell level. So it is the weakest out of the four indices. Why is that important? Because as you make your decisions, your trading decisions, what you should look for, in my opinion, of course, is to buy strength and sell weakness, meaning looking for long positions with the strongest market and short position with the weakest market. You always want to buy strength, sell weakness. So the Nasdaq, let's say you're not in any trades here. The Nasdaq would be the market I would consider to be long at, and the Russell, as opposed to the YM or the S&P, is the market I would consider to take short trades. Why? It is the weakest. The YM is just slightly below the midpoint. So is the S&P, really. But the Russell is way below the midpoint, which makes the Russell the weakest index, which means all things considered between these three, I much rather take shorts in the Russell because it is the weakest market. I will touch upon other things later on in the video. Right now, I will put it on pause and start getting ready for the morning with my group. But for those of you who don't know, we have a Zoom room where I go over in real time direction and targets for specifically for the Nasdaq and the S&P, because I found these are the two markets most traders are trading, the Nasdaq and the S&P. So I focus on these two markets in Zoom, and I also have a trade indications channel. Let me show you. So every morning between 7:30 and 8 a.m. Eastern, so an hour and a half to 2 hours before US session opens, I post direction and targets for, again, the S&P and the Nasdaq, and these are very accurate, I believe. So those who cannot join us in Zoom, they can still read. Basically, these are, I guess, summaries of what I go over in the Zoom room at 8 a.m. And then at 9:30, when the US session opens, I am in Zoom and we make some real-time trading decisions. Okay, so now I'm going to put the video on pause and get back later. All right, so 4:30 now, markets are closed, and I just want to go. Well, first of all, this is the total, right? This is the account traded, but I really want to go over something that's really important. I mention it in Zoom all the time, but not everyone is able to make it to Zoom. So basically, it's like this. Between 7:30 and 8 a.m., so 2 hours, an hour and a half before US session opens, in our trade indications channel, I post these trading ideas. So S&P below 75, at the time S&P was like 73, 74. Below 75 would target 68, 64, and 58. So I have a bullish and a bearish scenario for both the S&P and the Nasdaq. So below, so this is now after 8 a.m., right? So somewhere here, I post below 75. If we get below 75, expect to see 68, 64, and 58. Now, they got down to 64, and then this was slightly before US session opens, now between 9 and 9:30. I said, well, now that we got to 64, there is a chart, a 120-minute chart, that was pointing to between 74 and 78. So right around 64, at this point I said 74 to 78 within the first 2 hours of trading. What they do is they get to 73, high of 73. And that brings to my point. There is a difference between trade indications and actually trading it. So the indication was to go from 64 to between 74 and 78. They got to 73. So they missed by 4 ticks, right? One S&P point. So when one is trading it, if someone decided to take a long, as I suggested, between like 64, 65, 66, whenever, somewhere in that area, uh, it's important to fade the targets. So don't go to the 74. Really fade it. So 71, 71.50, maybe 72. You always want to fade, because what they did was they got only to 73, missing by 4 ticks. And you might say, well, 4 ticks, no big deal, right? But it is a big deal, because once they miss like that, the reaction could be extreme, because all the energy that was supposed to take the price to those exact numbers, 74 to 78, instead of that, it is now transferred to the other side. And now we saw everything I mentioned in the trade indications channel. They got to 68, 64, 58. Now at 58, I decided to take a long in the room, and I got stopped out at 52. I really thought 58 would be the destination upon kind of a miss. At this point, I still thought they're going to come right back to it. But I took a long at 58 and I got stopped at 52. Why at 52? Because, as I mentioned in the room, if they're going to break 52, they're going to go to 42. They got to 42, spiked it quickly to 38, and then started to firm up. At this point, I said, well, as long as 42 holds, the first destination on the upside is 52, and then in the second half of the day, 63 to 64, and they did all of it. They got to 52, they got to 63, and take a look what they did toward the end of the day. Look at this high, 77.50. 77.50. This is what should have happened here. Instead, they came all the way down. They did the opposing level to 74. I said that in the room. The opposing level to 74 was 42. So, they came within 4 ticks. They said, nope, we're not going to do that. Came down, did the 42 instead, firmed up on 42, and then did the 74 to 78 anyway. The reason I'm bringing up this whole story, by the way, look what they're closing, 58. Again, 58 was a price where I took a long at. This price has a certain importance. I don't want to get into it now, but there was a reason why I tried the long at 58. It didn't work out. Like I said, I took a stop at 52. But then once they firmed up on 42, it was just up we go, 20 points and more to the upside. And now they're closing at 58. So tricky day. And again, not to make this video too long, but the point is, when you see these trade indications that I post every morning, always fade the targets. It's just important, because what they did was, after they got to this 64 level, and I said, 7, it was here, right? Yeah, they got to 64, and I said 74, and they got to 73. So, again, fade levels, always fade levels. Anyway, this is it for this video. Please leave me a like if it helped you at all. If you want to join our group, it's in the description. I know it's been a while since I made a video. I'm going to try and make more videos for this channel. Just been really, really busy. Thank you all. See you next time.